Alright, hi guys, this is Truman Hudson once again, and today I'm going to be doing the second software session for you guys. This one is going to be entailing the state side of the return. Now, so far we've only been focusing on the federal side, so today what I'm going to be doing is just giving you guys a little run through of the state side of the return. Now, the sample return that I'm going to be using today is Hilda Moore. This can be found on page 56 of your publication 4491W, that is the Red Book. Now, what I want you guys to focus on today is not necessarily getting the right answer, but just seeing how the forms on the state side work and getting more familiar with it. Now, you guys won't have access to this training software at home. This is actually the twonline.taxwise/training, which is the actual program, the training software for it. But the reason why for right now we don't have you guys getting access to it is because we don't want a case where you guys also have access to the official website, which we can't give you separately. We'd have to give you everything. So for now, you guys can just use this video as a refresher, but you won't be able to practice as of right now. Okay, so for Hilda Moore, I'm just going to give you guys a little run through of my return on the federal side. Now, for the most part, you guys should be able to handle this, but I'm just going to be scrolling through so you guys can take a look at it, maybe match it up with your own. Okay. Now, one thing I want to make note of on the main information page is that this section right here where it says state information full year resident, it's going to come with NY pre-enter, but what I want you guys to do is to delete it and re-enter the initials NY either in this first box or the second box. This will allow the state forms here to actually pop up if you're having access to the training software. Alright, so scrolling down some more, again the taxpayer's PIN is going to be your zip code. Alright, and then on the 1040 worksheet 2 we got her student loan interest, an amount of $439. Alright, we filled out her EIC for all her dependents. On her W2 we check to take calculations off of lines 3, 4, 5, and 6, entered in the right numbers. Now on the state side of the W2, what I want you guys to pay close attention to is right here where it says NYC. Now once your client or your practice return, whoever you're dealing with, if the person lives within the 5 boroughs, meaning Brooklyn, Manhattan, Bronx, Staten Island, and Queens, once they live anywhere within these 5 boroughs, they have to pay city tax. Now, how you indicate this is that you're going to make sure to put right here NYC. Now, if the person lives, like, let's say upstate or Long Island, they would not be paying any city tax. Therefore, we'd be leaving this blank. All right. So now I'm going to move down to the W2G. Just making sure to have the gross winnings here, types of wager. Right, got her unemployment. Now the 2 forms that I wanted to pay attention to on the federal side are 2 new forms that I didn't discuss last time, which is actually the 1099-R and the tuition statement right here, education credit. Now the 1099-R is your retirement plan, IRA, etc. form. This pretty much works the same way as the W2 with one minor section that is a little bit different, which I'm going to be getting into in a minute. Now for the payer ID, you want to make it to match exactly what's in the book. Again, this is given to you page 56, publication 4491W. The client is Hilda Moore. Alright, so you guys should have all of this already in front of you. Now what I want you guys to pay close attention to, however, is this section right here where it says instructions vary by state, check if applies, box 1, box 2, box 3, railroad retirement. Now box 1 and box 2 pretty much stands for either private or public respectively. Box 1 is private, box 2 is public. Now the difference between these is that on box 1 your client does get taxed on a portion of their pension income. Box 2, however, if your client has a public pension, they do not get taxed on this at all. So you want to make sure to always double check to see what type of pension your client may have. If your client has a box 2 pension, which is a public pension, and you accidentally check box 1, now you're going to be taxing your client on money that they should not be getting taxed on, which you really don't want happening, because that could cause a lot of problems for us. So you want to double check at all times. And how you can know is if you take a look at their payer's name. Now, if your client is getting paid from anywhere, like a government organization, a retirement service program, anything that's like that, then these are usually public pensions. All right. Now, if your client is getting paid by whatever company they work for, let's say if it was Chase Bank or whatever the case may be, these are private pensions. So that's how you can pretty much determine the difference. If you come across a case where you might not be completely sure, don't just guess. You might want to call somebody or let them double check for you to make sure that you did make the right decision. All right. So that's it for box 1 and box 2 right here. Box 3 and real retirement, you guys don't have to worry about that because you should not be encountering anything like that. Alright, now moving on down to the education credits form. Now on this form there are two different kinds of credit that your client can qualify for. They can either qualify for the American Opportunity Credit or the Lifetime Learning Credit, which is right below here. They cannot qualify for both. You can only take either or. Now the American Opportunity Credit is for anybody that's in undergrad for under 4 years. So if this is your 5th year in undergrad, you may be doing a double major or whatever the case may be. If this is your 5th year, then you do not qualify for the American Opportunity Credit. You'd have to take the Lifetime. Now the difference between the American Opportunity and the Lifetime is that the American Opportunity Credit you can get on both the federal and the state level. However, the Lifetime Learning Credit is only federal. So that is one of the major differences between these two. As far as the American Opportunity Credit is, you have a cap which is $4,000 on the federal level, whereas on the Lifetime Learning Credit your cap is $10,000. So, and these are after scholarships have been subtracted. So if you have a case where you have a client that may have spent $20,000 in tuition, however it's subsidized by an amount of maybe $10,000 in scholarship, then in the end they would only be getting $10,000 as qualified expenses. The qualified expenses, however, does not mean only tuition. It could also mean books, laptops. Any major spending that you had to do that was school related can qualify here. Again, if you guys want to brush up on this, you can always double check your 4012. If not there, you can always check out your irs.gov website. The software does have a help button right here that you can also use. It's going to bring you to the help center, and you can just type in anything that you need. So in this case, if I wanted to check out education credits, I would type education credit in, and it gives you a list of things, and it's just a matter of just looking through it and figuring out what it is that you're exactly looking for. Alright, so here you want to make sure to put in your student's name. Now it won't be every case where your client himself or herself is a student. It might be a dependent. This doesn't matter. As long as it's somebody that they're claiming on the return, then they can use the student here. Alright, so here we got Ronald Moore. We have the student's social security number, we have qualified expenses, and here it tells you, but not more than $4,000 per student. So if the amount goes over $4,000, you just want to reduce it to that capped amount, which is only $4,000. Alright, as far as the Lifetime Learning Credit is, it pretty much works the same way. You have first name, last name, social security number, qualified expenses. This will automatically calculate. So if you need, even if you put $20,000 in qualified expenses, right here it would only calculate the smaller of either whatever number you put or 10,000. So if you put a number over 10, the computer will only take $10,000. Alright, so that is pretty much it for the federal side of this.